Erin Swenlin, what a pleasure to meet you.
Thank you so much. It's great to be here. First time guest indeed. I have to
Yeah.
say, I am on the West Coast, so I'm seeing part of the day that I generally do not.
Okay. Well, I am too in San Diego. It's hell on earth, right now with the temperatures and threatening of rolling blackouts and fires about 5 miles away from me, and thinking of getting out of here.
Yeah, I have to
But
say,
yes, yes, I
I'm
hear
on
the
that list
owls.
to leave too.
Yeah, I'm on. I hear the owls when I get up. I get up at 4 a.m. even before the roosters. So, Erin, great to meet you. I'm familiar with Decision Point and your father, who has been on financial media for many years, and you guys produced an excellent product, elite analysis over the years, and appreciate you being here with us today. We do have a screen share if you want to show any of the charts. Otherwise, we could just, okay, there you go. All right.
Yes.
Okay. So, I went to your website and you have these things called diamonds. Is it diamonds in the rough or what do
Yeah,
you,
it's my decision point diamonds. So I do
okay.
two different publications. One is our decision point alert, and that does kind of the overall market review. You get dollar, gold, oil, bonds, gold miners, Bitcoin yields. All of that is in the decision point alert. And then I do these decision point diamonds, which are diamonds in the rough that I
Okay.
find from my decision point scans
Okay.
and present to my readers Tuesday through Thursday. And then we do a recap and a subscriber only diamond mine trading room. So a lot of fun, have kind of a hand in hand products here. I am bringing in a big special for everybody who is here that we ran earlier. And I
Okay.
think that everybody will enjoy.
Okay.
But our products are pretty easy to use and read at any particular level you are at in technical analysis. And really the best part of it is they're absolutely and totally inexpensive for the professional quality of what we do. But mainly what we want to do is not just leave this kind of information to those who can afford, thousands of dollars a year or month, and make our analysis really available to all various traders out there. So, we have some big money managers, but we also have, the small retiree
Sure.
trading traders. So we cover it all for everybody. And I'm going to offer a special, and I'll put it in the chat, but basically I'm going to give you the first month of both or either for $14 your first month. So you have an easy way to try us out, very little at stake there for you. And it gives you a great way to come in and see what we're doing here at Decision Point.
Okay. And the main coverage is equities. It's mainly
Yes.
all
Uh-huh.
equities. Okay. So let's take a look at some of the things that you were ready to talk about. You know, uh, right now, after that big rally we had off the June lows, I guess more people are leaning towards the resumption of a bear market, and that we're going to take out those lows. Are you in that camp? Because I'm seeing some sentiment indicators like 11% bulls in S&Ps, and it almost feels like people are even more bearish than they were in June.
Yeah, I understand. Yeah, I'm with you there. But really, when you look at some of the charts, Brett, yes, there are some oversold indicators there. But in the grand scheme, I mean, when you look at the VIX, let me see if I have a better picture here of the VIX over time. Here we go. You can see that the VIX, back in June, I invert my VIX. Let me just say that right out the gate, because I know that
Okay.
confuses people,
Right.
mainly so I get
Interesting.
oversold on the bottom and overbought on the top. So I,
Okay.
I apologize. I know everybody's like, what is that? But if you look, I mean, the VIX was at much, much higher readings than what we're
Right.
seeing right now. So to me, I don't see the sentiment being bearish enough. at this point. And really, I'm basing that mainly on the VIX. But really, if you look at like new highs, new lows, let's see if I have my chart ready here. Again, we're not seeing the kind of new lows we had back in June after this big decline, or even back here in May. So, you know, in my opinion, we're not really oversold enough. But, you know, breadth-wise, there certainly are, you know, reasons why you would think that we should be. Let me show you my bias assessment chart. And this is proprietary chart to what we show in Decision Point Alert. I'm going to be showing you a lot of charts from that particular publication. But the one thing I really wanted to highlight for all of you, because it's the only thing that it's exclusive to us. We just came up with it a couple of years ago, and that is our Silver Cross and Golden Cross indexes. Nobody does this, and it's really very intuitive. Everybody's familiar with a Golden Cross.
Right.
We use exponential EMAs. A Golden Cross is when that 50-day crosses below the 200-day. So what we decided to do was look at how many within the S&P are actually on golden crosses, you know, have a 50 above their 200. And right now that's low, that's at 37%. But again, we saw lower readings back here even in July on that golden cross index. But you know, you can see that when we're in a nice bull market, you know, you're going to see about 80 to 90% of the stocks above have a 50 above their 200. But we decided to go one step further and do a Silver Cross index. And the Silver Cross we call a 20-50-day EMA positive crossover. So this tells you how many stocks right now in the S&P have their price, have a 20-day EMA above the 50-day EMA. And again, you can see that those readings were very, very oversold. We're not even close, really, on that Silver Cross at this point.
Okay. So instead of interpreting it as the market is holding up, some of these indicators are holding up pretty well, you're saying it's just getting started and that we could very easily end up with the same kind of readings we had back in June. So there's more to go to the downside. That's your narrative.
Absolutely.
Okay.
Of course, we do, you know, look at the percent above their 20, 50, and 200. And again, these are really, really low numbers. But, you know, we hit 0 back in June on the percent of stocks above their 20. I mean, this is still extraordinarily low. It's definitely an oversold reading, as are these. But my point is that we're just not there yet. I mean, I don't see why the market couldn't continue lower. I know a lot of people are, you know, again, talking sentiment, talking the participation being so low, which is true, but it's not as low as it was back in June. So we are definitely bearish moving forward. I saw a lot of those charts earlier before I came on, and I think a lot of people are in that same camp. And today I very much expect, let me get back to this chart back here. I very much expect this rising trend line to fail. I mean, we dipped down below it a little bit yesterday, this support level as well. I mean, this should be a strong area for a bounce. I mean, if the market was going to bounce, this is really the place to do it, off this rising trend and off this support level. So, but I don't see it happening. I wish and hope that I am wrong. I was very much hoping my colleagues who were telling me this was the end of the bear market here, I was very much hoping they were right, but I really was thinking they were wrong.
I almost thought it was too obvious where it stopped, right at the 200-day up there.
Absolutely.
I mean, there was a 200-day right at the highs above 4,300. I go, could it be that easy? And, you know, I'm pretty jaded after trading for all these years. And when I see something that is so obvious, it reminds me of someone you probably don't remember, a guy named Joe Granville.
I do know Joe Granville, not personally, but
but he used to say what is most obvious is obviously wrong. So I mean, that was his type of contrarian nature, but it definitely was a great trade in hindsight, shorting it up there.
Absolutely. And there's, like I said, if it's going to bounce, this is the place. But of course, there are certainly support levels, below this that we can certainly get to and bounce. But, my father, who I have learned a lot from over the years, what
How
we talk
fortunate
about
for
is
you.
Carl Swenlin, yes.
Yes.
And what we've talked about is, a lot of people haven't lived through bear markets right
Yes.
now, and we have, which is
Yeah.
another reason we think that our product is so good because we
Yeah.
actually have that perspective. We're
Probably a
not
whole
looking at
generation.
2020 and
Yeah.
2008, but even 2008, I can't believe how long ago it was, but
Yeah.
even then we don't have a lot of people who experienced that.
Or 2000.
Yeah, exactly.
Yeah.
There's some pretty rough times out there. And the main thing is, and stockcharts.com did on Stock Charts TV, I helped host it. And you can find it on YouTube.
Right.
And we talked about bear markets and the history of bear markets. And we brought in some analysts, like Mish Snyder was there from Market Gauge.
Oh,
I
no,
can't think of
Mish.
the others because they were recorded when I wasn't there, but really, a lot of my colleagues out there that have lived through it have said often about this that, they last more than a month and a half. That
Yes. Yeah.
they can
Great
go
point.
on for months and years. Um,
Yes.
so I think that we're kind of in for one of those times where it's just going to be slowly cranking downward and just grinding traders even more, sadly, than what we're experiencing now.
Are there anything, I mean, in these bear markets that we've gone through before, this bear market is kind of like, and in fact, the bull market was the same way. Seems like everything inflates together, goes up together. And I'm talking about different asset classes. I mean, even
Mm-hmm.
during this decline with the Fed tightening, what do interest rates have to do with agricultural commodities having the same chart pattern as gold or the inverse of the
Mm-hmm.
dollar or the S&P? Have you ever experienced a time period in the market where it's almost like a balloon where everything goes up together, and then when the air is taken out, everything fails together?
Yeah, I think that this is a little bit more unique in that the entire market is being really hammered right now. Again, I don't have to tell you that. Um,
I mean, no
that's
flight to
been kind of the problem
quality.
I've had, right? Because I
Yeah,
have to do these decision point diamonds. I have to bring in stocks that, should go with the tide of the market. Well, of course, the tide of the market is going down. All of my
right,
scans are coming up empty. I mean,
right.
seriously, none.
I
And I
believe you.
usually have 100 and something stocks to look through. So, looking at the industry groups, I wrote an article last weekend, the fact that on stock charts, they cover 104 industry groups. And at the time, only two had rising momentum, two of them. And
Wow.
those were gold miners, which we know
Yeah,
are in trouble, and
yeah.
oil equipment and services, which is, obviously tied
Caving a
to
little bit.
oil, which is struggling right now.
Right. So there's nothing. I mean, you're short the
No,
world and long the dollar.
no, there really isn't. I will show you the diamonds that I did present yesterday to my subscribers. I
Okay.
have no idea how these are going to turn out. We actually have done better
So
than
when
the
they
S.
don't work, Aaron, do you call them cubic zirconiums?
No, they turned into coal. They were diamonds in the rough, and they
All
turned
right.
out to be coal. So
Uh, well, even coal is expensive. Santa couldn't get any last year, so you
that's
could have
right.
been
That's
you
right.
could have been naughty last Christmas. So, um,
So I have three, and two of them are in the real estate sector. And again, I've been telling my subscribers, I mean, this is
yeah.
really a learning experience. This is watch list time.
Okay.
Um, Yesterday real estate had a pretty decent day. And so it wasn't surprising that after I manipulated my scans, and I'll tell you, I have to manipulate them to death right now. I have to release the idea that you have to have a 50-day EMA above a 200. I mean,
Yeah.
That's always the basis of my scans, but I have to remove that because there are so few stocks with a 50 above their 200. I mean, you saw that bias chart. So
Right.
it's really tough to find them, but I did find 3 yesterday that I thought I would just bring to the table today for the viewers. And the first one was apartment investment management. So actually, let me show it to you through my the actual report. That way you get an idea of what they look like and how that works. So, all right. So I always do a little bit of an opening. I also will post, what my runners up were, the short list, if you will, after I go through all of my hundreds of charts. So I do 3, but I also give you, a couple to look at as well. I have the recording link and registration for my diamond mine. Decision Point has a trading room that we do for free on Mondays. You can register for that right off of the front of our website. And Carl joins me in that trading room, and Stock Charts TV does now record it, so you can see the old ones on YouTube. But basically, I give you the name, I give you the earnings date, I tell you what they do, and then what predefined scans on stock charts that triggered on that day, so you get an idea. I don't follow point and figure, but there are scans in there, and I figured people should know who follow it, what triggers happened. And then of course I give my write-up on the daily chart. And in this case, the RSI is positive, it turned up. My PMO, this was the thing, I couldn't find PMOs that were rising. I mean, that's a pretty big one. When you're looking for stocks, you do want it to have rising momentum. And most of these are showing deceleration from their declines, but a lot of them haven't turned up yet. But you've got stochastics rising. And then I do relative strength studies. I do not only the stock against the SPY, but I also look at the industry group against the S&P, and I look at the stock against its industry group. So this is what tells me, okay, do I have a strong stock within that industry group? Well, if it's performing relatively better than its group, well, absolutely.
Right. Do you recommend shorts? I thought I heard you say something about shorts.
I do have a scan, and I haven't done it, and I think I'm going to switch to it because I am struggling to find. I'm struggling to find things on the buy side. But I do have a scan called my Diamond Dog Scan, and it looks for obviously dogs. I love dogs, but that's the euphemism they use. So, I have a scan that does that, and I can present shorts. It's just, for me, shorts, the thing I don't like about them is, your potential gains are bounded. It'll only go down so far. So my preference is to be on the buy side, but sometimes, I do ETF day on Wednesdays, and, the ETFs that I've been presenting have been pretty much inverse ETFs. I mean, they're the only ones with charts that look good. So that's what I try and bring to the table. So, this has got a falling wedge, had a nice rally yesterday. So I'm looking for an upside breakout here. I always put a stop level in. My stops run between about 5 and 8%. And I do like to try and line them up with support levels. It's sort of an easy way to do it, but it's worked for me. But I always put those stop levels. But then I go one step further, and I always show a weekly chart, because, you really do need to get the overall picture. Obviously with technical analysis, you kind of want to go big and then get small. But everybody looks at a daily chart first. I mean, come on, we all do. But after that, I like to bring that weekly chart in. And honestly, this looks like a really nice bull flag. And, the weekly momentum is looking great.
Nice. Yeah. Do you look at any like uranium or things that
Indeed
are okay? Because you had the news out of Japan going back to them, and Putin has control over a lot of uranium, so he could squeeze people that way too.
Yes.
Yeah.
So I'm going to look for my last uranium chart here.
and lithium. All I'm, I'm like
Yes,
you. I'm looking for where there might be opportunities due to what's happening here on the global stage, and where,
absolutely.
up until the correction in commodities, people were calling it the shortage of everything.
Right.
But now it's only the shortage of certain things, right?
Right.
It's changed a little
Absolutely.
bit. Yeah.
All right. So let me just open this one for
How
you.
long have you been at this? When you were, in grade school, was Carl
I
showing you this stuff?
Yes, actually, you mentioned Joe Granville.
Yeah,
My dad was a big fan of On Balance Volume.
yeah,
And so back in the day, before there were computers, he would get pencil, paper, and a
yeah,
ruler out with the Barron's
yes,
newspaper. And I would sit down and in on those spreadsheets, I would write in pencil and then calculate what the on balance volume was. So I would do that for my dad back. I think I was in junior high at that point.
wow,
And in high school, I was still kind of following it, but mainly because, and I don't know how many LA folks are watching this, but we used to go home. I was working at the part-time at the engineering company he was at, and we would go home at lunch and watch Gene Morgan
oh
on
yes, on
KY.
KYTV. Yeah, I used to be on there.
So I
Yeah, it's
loved Gene
oh,
Morgan,
yeah,
and I
charting
always
the
thought,
market with Gene Morgan.
charting the market. And
Yeah,
I always watched that in high school. I was like, what a great job. Like seeing these charts and reading them for everybody. I mean,
yeah,
different every day, how exciting is that? And
yeah.
so,
That
yes,
studio was on Sunset, wasn't it?
yes,
Yeah,
yes.
okay, yeah, I
So,
remember.
yeah, so I grew up with that. And then when I hit, I guess I'd already graduated college and I was in the Air Force. I was Air Force ROTC. And my
Huh,
dad called me on the phone. He was trying to come up with indicators, and one of them was the PMO. And that's our price momentum oscillator. It's like the MACD PPO, but it's our own calculation. And he couldn't do the algebra. So he would send me the formulas of, okay, this is what I'm trying to find. And here's all of the things that I have in it. Can you solve for X, or solve for Y? So,
yeah,
and I was like, oh, this is fun.
yeah,
So I helped him develop develop the formulas that we use in a lot of our indicators, mainly because I did, those spreadsheets and
right.
helped with the
It's
formulas.
in your DNA,
Yeah,
Erin.
it is. And
Yeah.
I'm a writer, he's a writer, my brother is a writer, he was in the animation business, and my daughter just graduated from New York Film Academy as a screenwriter. So
Wow. Wow. Creativity.
yes,
That's the fun part of the business,
yes.
isn't it? Yeah.
So yeah, I do uranium, I do lithium. Really, I cover all the ETFs and,
Yeah.
wheat, corn. If they
Right.
look good, I certainly am going to present them. And
Right.
uranium's looking very nice. I mean, it's
Yeah.
kind of been choppy right here after getting above the 200 EMA, but, it hit the overhead resistance,
Right.
kind of is doing its pullback. But, in the big picture, I see a reverse head and shoulders with a
Yeah. I see
head,
it
left
too.
shoulder, right shoulder.
Yeah.
Um,
Buy breaks.
yeah, it really does look pretty good right now. And with, rare earth materials in general, I was looking at the remix chart. I call it remix,
And they were a great band.
right? I
I
had all
probably most of
those.
our audience
The
won't remember them,
1980s.
but go ahead. Go watch a rare
So
earth
I've been
video.
watching the rare earth materials because obviously this is an area with the war and everything that's been,
Right.
a big area. But, the double top on the rare earth materials has really kept me away from presenting it as a diamond. But, if we get
Right.
another breakout here, we could
Yeah.
start forming a falling wedge again, and that would be bullish. The chart's starting to shape up, but as I tell my subscribers, I do not buy anything And I'm dead serious here. I do not buy anything where the PMO is pointed down. You know, if it's got negative momentum, my risk level goes up so much. And so it's just not worth it. I'm a swing trader. I'm a momentum trader. Drives my dad crazy because I'm always looking for confirmation before I get into something. I mean, the PMO could turn up, but it's like, well, I need to see it get above the 50, or I need to see this happen. And it serves me well, but obviously you lose out on the beginning of some moves.
Yeah, but your hit rate's probably higher because you wait for confirmation. Because I'm
I
more like
believe
your
so,
dad. I
yes.
like to hear the ice crack and anticipate it sometimes, and then kick myself. So, you know, this was a great interview, Erin. I'm so glad that our paths crossed on Twitter and I was able to meet you and talk to you. I really appreciate your time with us today. Yeah, I'm getting,
Sure.
like, in chat, 5-star interview. So, you know, anyone who, you know, is interested in stocks, you could tell after 2 minutes that you're hearing a pro. And
Thank you so much. And for those of you interested in that $14 intro price, just use the coupon code BEARS, BEARS. I'll put it in the chat box. But if you just go to our subscriptions and when you apply, just use that coupon code BEARS and you'll get your first month of one or the other or both, however you want to do it. You can get the bundle or not, and you can get it for $14. Just use that coupon code BEARS.
Thank you. You're now my trading warrior sister.
All right. Sounds good.
Great meeting you, Erin. And I'm a fan and rooting for you and your dad.
Oh, thank you so much.
Have a great fall trading season, and perhaps we could do this some other time down the road.
Yeah, I would absolutely love that. So definitely give me a call and hit me up on Twitter. For those of you who want to follow me on Twitter, _decision point. I'm not prolific in my tweets, but they're usually pretty good ones.
Okay. You know, that's confidence. You know, in my extremely humble and accurate opinion, I agree with you. So thanks very much, Erin. Great meeting you.
All right. Thank you. Bye-bye.
Okay. Bye-bye. Everyone, that's a wrap. Take advantage of Erin's generosity, and you could join the team in 15 minutes on the Morning Edge. See everyone tomorrow for the ECB. Adios, and remember, don't just count your pips, count your blessings. See everyone tomorrow. You're very welcome. Thanks again, Erin.
Oh, you're very welcome.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.